Hello everyone and welcome to the JIC Research Edge. I'm Scott Wyckoff and I'm joined by Brandon Zureick, JIC's chief economist, and we're going to be talking today about trade policy. So Brandon, we've seen a lot of headlines about trade and trade wars. Could you start by explaining what President Trump is trying to accomplish as it relates to trade and tariffs?
Sure. The president believes that unfair global trade practices have ultimately put America at a competitive disadvantage relative to most of its trading partners. And he believes that by levying tariffs against them, he might level the global trade playing field and ultimately bring industry and jobs back to the United States. And recent headlines would suggest that we shouldn't take his threats lightly and that he may be committed to correcting decades of perceived trade injustice. So at the end of the day, it feels a lot like the trade war is starting to heat up.
So what has the president actually implemented already, and then what is he threatening?
Sure, so there's some good and there's some bad news. The good news is that the amount of tariffs that have actually been implemented in relation to the amount that has been threatened still remains quite low. So the only goods today that actually have tariffs imposed are solar panels, washing machines, and steel and aluminum. Now the bad news is that in response to some bilateral retaliation from countries like China and Europe, the president has really upped the ante recently. So today, up to $800 billion worth of goods imports, he has threatened to impose tariffs upon. So that's a very large number, and in fact, it represents nearly a third of all the imports coming into the United States, and is really concentrated in China, where potentially almost everything that leaves China's borders and comes to the US could be subject to new tariffs. But it's going to be important for investors to watch an upcoming deadline. On July 6th, the next round of tariffs is set to go into effect. And so it'll be important to watch for signs that the president is willing to make good on these threats.
Okay, so it's pretty clear the trade war is heating up. So could you talk to us a little bit about what some potential implications are for the market and for the economy?
Sure. Most economists estimate that growth might slow modestly going forward as a result of some of these tariffs, specifically less than 0.5% slower growth going forward, and that inflation could potentially rise temporarily in order to reflect these new price levels. But certain industries are likely to feel more acute pressure. Specifically, we're thinking about autos, certain technology companies, and domestic manufacturing companies who rely heavily upon steel and aluminum as inputs will have a tougher go of it going forward. And what these estimates fail to quantify is the potential hit to confidence, both business and consumer. So we've already seen some fairly high-profile companies come out reacting somewhat negatively to recent trade headlines. Specifically, Daimler has told investors that it's unable to continue to earn the same level of profits under this type of new trade regime, and that Harley-Davidson has gone as far as to say they could potentially shift production to Europe in order to avoid some of these new tariffs. So it's going to be very important for investors in the market to remain focused on that July 6th deadline for signs that the president is either willing to come to the negotiating table or whether he wants to continue to ratchet up the pressure on trade.
Okay, Brandon, well, thank you for the insight, and thank you to all of you for watching. And as always, feel free to reach out to your team at Johnson if you have any questions.